What is going on, guys? Good afternoon. It's your favorite mortgage lender, Del Me. Got mortgages. Happy February, man! Pretty crazy. We're already in a new month. January is right behind us. We are going to go over everything that transpired last week, like we normally do. What's the expectation? This is a major, big week where we're going to have obviously employment data numbers start to come out. We'll kind of see how some of the changes in regards to the employment market really has transpired and take it from there. So I'm going to go ahead and share my screen, and we're going to start diving in. Really, the Fed obviously once again came out and have decided to pause for the first time after us seeing about a 1% cut on interest rates. What does that basically mean? So, again, starting off when we looked at the PCE report, personal consumption expenditure report, that is the Fed's favorite measure for inflation, as we can kind of see here at the core level, which essentially strips out volatile and stuff. It came in at 2.8, really right in line pretty much to where we have been at. Now, what does that basically mean? We saw obviously cuts September, November, and December for interest rates dropping to 4.25 and 4.5%. Now, again, the Federal Reserve's whole mandate is to do what? Is to maintain a stable economy and really monitor, obviously, that federal funds rate being that overnight short term rates for banks. Okay. We know that the Fed obviously aggressively hiked in 2022, where inflation was almost at like 9.1%. It has obviously subsided now to where we're at that 2.8%. We know, again, talking about the PCE report, it only jumped up 0.3% in November. Again, the data being a little lagged. One of the major parts when we look at this is the shelter component. The shelter component tends to consistently lag. And as that really shelter numbers start to really come out over the next few months, I think we'll be very close to that crucial role of interest rates and the federal funds rate dropping truly, because I think that goal of that 2% inflation target should probably be approachable, right? Now, new home sales, this was actually a slight surprise. Home sales have jumped up 3.6% month over month and 6.7% year over year, showing a little bit of a jump also in the median price of 427,000. So, jump of about 6%. We saw a little bit of a just a pretty consistent downtick on month supply, 8.5 months. Remember, that includes just homes that are not even built yet. So about 108,000 homes not built, 268,000, which is a great number to see. Homes that are under construction, about 118,000 homes that have been completed. Again, what's the overall numbers? 494,000 new jobs are set to be available at the end of December, which is pretty interesting to see and actually really good. Pending home sales again remained relatively flat at 74.2. A little bit of a downtick on month over month sale and a 5% year over year sale, which again is typical. It's a fourth month of a slight slowdown on this stuff. One part, remember, is contracts obviously dropping really shows that in some high priced areas that may necessarily obviously be the case, which could cut down some affordability concerns, right? Now, speaking of affordability, home prices continue to appreciate. We saw obviously that a jump of about 3.8% on a national level. And then, of course, we saw on a 20 city index level, really even higher at 4.3% in particular. GDP. So, GDP report, which is a gross domestic product, that essentially measures how the economy is doing. And that also saw an increase of 2.3%, which comes off of a 1.6% in the first quarter, 3 in the second, and 3.1 in the third quarter, which is pretty crazy. And then we also saw on the unemployment side a slight decline of 16,000 new filings. And then we saw continuing jobless claims also reach that 1.85, really staying in that consistent trend of 1.85 to 1.9. Now, what do we got going on this week? We are going to get inputs on the employment market, right? Tuesday, we'll get job opening and labor turnovers. Wednesday will be private payroll. Thursday, initial jobless claims. And Friday with the BLS report. I did want to also talk about the tariffs, not diving into too much politics, but really kind of seeing, and our friends at MBS Highway did a great job of breaking this down. It's important for us to think that the tariffs and everything that's happening is really not done from a trade perspective. It's done to combat essentially the war on drugs, right? And specifically with fentanyl. And I started doing a little bit more deeper dive and started to see that Canada and Mexico happen to be one, a big resource for us. One, Canada imports, I believe it's about 70% of our lumber, which is going to potentially obviously increase the costs if it stays. Now, they did both today, Mexico and Canada, just a few moments ago, actually agreed for a 30-day delay. Hopefully that kind of put things into perspective and we won't really reap the impact too much on inflation. But looking at things again from a face value, obviously the stock market took a beating. Bond market actually literally remained relatively flat, right? Didn't go up, didn't go down. Um, so did the 10-year treasury and the bond market, which is again interesting to see. I don't really think even they have any idea how to really target this. We have been pretty on a consistent trend, which is great. Really, what we're looking to accomplish. If you guys go over here and you'll see, right, we picked up some really big grounds that we help. Remember, anything in the red means interest rates are going down, in the green, interest rates are going up. So this was a big point where we broke that ceiling of 99.5, consistently went up, kind of held right at that ceiling, and now we're kind of staying and testing this major ceiling also, which is going to be typical again as we start looking at the employment numbers, could play a major impact. This is where if we kind of go back really over the last year and see how have interest rates been, we're pretty much kind of sort of close to really back in line, a little bit higher to where we have been with about February 5th, kind of right in line 7.05. And that was, I think I just had it, also 7.05. So kind of keep you guys updated again as we continue starting to see some of these impacts. Obviously, the rates have been pretty flat, like we can kind of see. Really, nothing really big. I think 7 point. We go 2025. Basically, for the last month, we've been at this ceiling of right under 7%, 7.05. So, important stuff for us to look at. Obviously, I will keep you guys updated. We will shoot another update for us towards the end of the next week and hopefully start to see some of these transitions, some of these impacts on tariffs. Could they potentially play a major role when we're looking at these numbers? And could obviously some of the changes on the employment numbers change how rates are going? Appreciate you guys jumping on. Make sure you guys visit our website, gotmortgages.com, for more info. Talk to you guys soon.